Imagine getting hit with a 50% penalty from the IRS just because you missed one simple retirement deadline in December. Unfortunately, this happens to retirees every single year, and it's not just the IRS doing this. Medicare surcharges, tax mistakes, even outdated beneficiaries can create a massive and expensive problem that is 100% preventable for you. The good news? Well, there's a simple checklist that can help you take the stress out of all of this, and that's what I'll walk through with you today. Your 2025 Fall Retirement Checklist. Let's get started. Hi everyone, I'm Isaiah Riel, Certified Financial Planner with Laguna Wealth Advisors, and I work with retirees and soon-to-be retirees every single day, helping them navigate their pensions, Social Security, Medicare, and investments so that they can enjoy their retirement with confidence. Today, we're going to cover 9 key items to check off before the end of the year, before December 31st. And so I want to cover those with you here now. The first 3 that we'll talk about is revolving taxes and investments. Here's the first thing to check off before the end of the year. RMDs, required minimum distribution. So if you're 73 or older, make sure your RMD is scheduled before the end of the year. Missing it can mean a 25 to 50% penalty, so please mark your calendar December 31st. Now, if you're not familiar with the term, an RMD is the minimum amount the IRS requires you to withdraw each year from certain retirement accounts. So, for example, that's traditional IRAs, SEP IRAs, simple IRAs, and most workplace retirement plans such as your 401ks. It's basically the government's way of making sure you start paying taxes on the money that's been growing tax deferred all this time. We still have to pay taxes on those monies. The second thing to check out before the end of the year, Roth Conversions. So if you believe or if you feel like you're going to be in a lower tax bracket this year, maybe this is something to think about. Roth Conversions, if you do that, consider converting a portion of your IRA before the year end to lower your future required minimum distributions, your RMDs. A Roth conversion is when you move monies from a pre-taxed account, like a traditional IRA, and you move it into a Roth IRA. So you'll pay the taxes on the amount that you convert now, but the money, and here's 2 kickers, grows tax-free, and future withdrawals in retirement are tax-free too. So really important. The third thing to check off, tax loss harvesting. So even in an up market like we're having now, there may be some opportunities to offset some gains without changing your overall investment strategy a whole heck of a lot. You can sell some of the investments that you have a loss on, and that'll help minimize your tax liability for the year. The second section I want to talk to you about, benefits and healthcare, things to take care of. The fourth thing to check off your list, Medicare open enrollment. So that begins October 15th, ends December 7th. Review your plan, please. Drug formularies, premiums change every single year. Make sure you know your plan and make sure if there's any changes that need to be made, please make those. The fifth thing to do, IRMAA Watch. So what is that? Well, Medicare uses your income from 2 years ago. So managing your income now can reduce your future surcharges. So here's why this matters to you. IRMAA, which stands for Income-Related Monthly Adjustment Amount, is basically an extra charge added to your Medicare premiums if your income is above certain limits. So for some retirees, that can mean paying hundreds of dollars more each month just for the same exact Medicare coverage. So the catch is Medicare looks back 2 years at your tax return. So your 2025 income, well, that's going to affect your 2027 premium. So planning now can help you avoid these surprise costs later on. The sixth thing to think about, healthcare coverage. So double check your deductibles and your out-of-pocket maximums before year end to make sure that they coincide with what our lives are looking like right now. The third section we'll talk about, estate and family planning. Number 7 thing to check off your list, Beneficiary Designations. Check your retirement accounts, your life insurance policies, and your brokerage accounts. It's quick and it avoids major headaches for your loved ones. Here's why this matters. The names listed on your beneficiary forms or as your beneficiaries on your accounts, it actually overrides your will and trust. So that means if your ex-spouse or your deceased relative is listed as your beneficiary, well, the money could legally go to the wrong person. So just taking 5 minutes to review and update these can save you and your family years of stress and even expensive legal battles. The 8th thing to think about for yourself, estate documents. Make sure your will, your trust, and your powers of attorney reflect your wishes, especially if anything has changed for you this year. If we've moved somewhere, if we've had some health issues, make sure that's updated for yourself. These documents, they're your voice. And when you're not able to speak for yourself, a will or a trust will direct where your assets go. Your powers of attorney, that allows someone you trust to make financial or medical decisions on your behalf if you can. So without these in place, your family may be stuck going through probate court, which is slow, it's public, it's costly, it's not ideal. So keeping them up to date gives both you and your family peace of mind. Really important. The last section I want to go over with you, cash flow and charitable giving. So the 9th thing to think about, charitable strategies. Qualified charitable distributions to be exact, QCDs. You can take these out from your IRAs. It satisfies your RMD and reduces taxable income. So let's talk about it for a second. A QCD is when you send money directly from your IRA account to a qualified charity. It counts towards RMD, which is fantastic, but the amount is not added to your taxable income. So it's a win-win. Another thing you can think about is consider bunching your deductions into what's called a donor advised fund. Now, a donor advised fund, or a DAF for short, is like a charitable investment account. So you'll make the donation, you get the tax deduction right away, and then you can decide over time which charities receive the money. So it's a simple way to organize and maximize your giving. So if you're someone that likes to give to charity, this could be something to think about. And the last thing I want to go over with you, year-end cash flow. Review your budgets, your withholdings, your tax withholdings to be specific, and your bonuses so that you don't get a surprise tax bill when April rolls around. So these are the items that make up your 2025 fall retirement checklist. A few small steps that you can take now can prevent some major headaches and help you enter the new year feeling secure. If you found this helpful, make sure to hit the subscribe button, please, so you don't miss future retirement planning tips from myself. Thank you so much for watching. Have a great day. Take care. Bye-bye.